Good morning, AlgoTrades investors. It's the week of Monday, June the 1st. Just want to quickly run over the chart of where the SP 500 is trading and what our analysis is showing in a recent trade that we've done. Now, taking a look at the chart, you can see we kind of went from a neutral trend here, got a strong rally up, and then price kind of consolidated and kind of traded in a sideways range here for quite some time. And then we saw a breakdown last week, and the market went into an oversold condition. And then we had a knee-jerk reaction to come up and fill this little gap. There's a little gap window here. Usually the equities market fills these gaps. Of course, it came all the way up, filled that gap, which happens to be under this little topping formation, so it's resistance. And of course, we've seen it pull back and chop around ever since there. Now, we did get long. The robot got long for us last week, coming up, taking some gains off right up at this area around the 2120 area, and took some gains off and closed the position out for a small gain there last week. Now, if we take a look at the type of analysis, you can kind of get a feel for what the market is doing here. I've got a couple indicators that I like to watch. And what I watch here is this. Let's start off with the average true range. So this is how much range the bars have going back in time. And now we had some wild volatility back in time here. So we saw the average range of the bars being much higher, being 5-6 points per bar on average. And again, this is a 30-minute chart. So some pretty big swings for the SP 500. Now, what we've seen is we've seen the uptrend pick up speed, and it kind of came up here, then traded sideways, really in this little sideways range. And it eventually even got even narrower into this much smaller range. And of course, as that happens, the bar starts to condense. There's less and less volatility. And what it's doing is the price is coiling and it's building up energy. And when you see a tight range, you see the average range really tighten up, very few points moved per bar, you know there's going to be an explosive move in one direction or the other. And of course, the explosion here was to the downside. We saw a sharp drop and a flush of the market. So everyone who got in long, built a long position, then got washed out of the market and they panicked out here. And now this here is an indicator that I built that shows panic selling in the market. And when this spikes over 3, which is around this level here, that's considered to be panic in the market, and usually we can see some short-term kind of low. Now, when it gets all the way up to the 9 level, which is pretty much where it reached last week on this sell-off, 9 is usually a significant pivot low. So overall, the market flushed down all this built-up energy as price was coiling. We saw all that energy get released and flush the market out, and of course, that's what gave us this extreme oversold condition and reading to get for the robot to want to get long. It was a cycle low. And of course, we saw panic, and we want to buy when others are afraid, because usually that's an oversold reaction to the downside. You usually see a knee-jerk reaction back up, which is exactly what happened and how it was played. So overall, we've been having the fear is still holding up. You can see it was much lower back here. We're still having some fear. Investors are fearful that we're going to see the market break down and head much, much lower. It is an ominous-looking chart when you look at the NYSE, the big picture of a large pennant formation, or sorry, a bearish wedge, that if price starts to break down and gets below this level here and closes, we could see a significant fall in the market. But that being said, equities are trading up this morning. We're going to see them gap higher, and we could easily come back up, test these recent highs, and then continue to go higher. But right now, all we're focusing on here is that we are in an uptrend, and we had some panic selling. We kind of got long and played that, and now we're going to wait for the next setup to go long. And really, that's about it. That's all we can do is follow the trend at this point. Eventually, we're going to see the equities market roll over, and we'll be pretty much focusing on the short side, and it'll be a bear market, but that may not happen for several more months yet. So we continue to wait for new setups, and now that the equities market is starting to move to new highs and showing a little bit of strength here on a short-term basis, we could be getting long again eventually and playing more upside trades. Anyways, that's it for now. Take care. Bye-bye.